In this video, I will explain one of the price action trading strategies using candlesticks and volume profile order blocks. The price action trading strategy discussed in this video is relatively easy to use, even if you are a beginner in trading. So, make sure you stay with us. This price action trading strategy can be applied across various markets, including Forex, cryptocurrency, stocks, and futures. This trading strategy is suitable for all types of trading approaches, whether you're into scalping, day trading, or swing trading. The minimum time frame for applying this price action trading strategy is 15 minutes. If you use a chart with a time frame below 15 minutes, this strategy may not be as effective. Before we proceed with the video, please support us by liking and subscribing to this channel. To use this trading strategy, the first step is to enter the TradingView platform. Then, go to the Indicator Search tab. In the Search Indicator tab, type Volume Profile Bar Magnified Order Blocks and select the one provided by Jacobmagleby. The Volume Profile Bar Magnified Order Blocks indicator is useful for identifying key levels within the market structure. It marks the order block areas in the market. This indicator is unique because, in addition to marking order block areas, it also shows the volume at the time the order block is formed. The order blocks formed are determined using the default time frame we are using, while the volume profile is extracted using a lower time frame. This enables you to observe market movement data more clearly, combining both the structural information from order blocks and the associated volume data. Now, go back to the Indicator Search tab and type Engulfing Candles Detector. Select the one provided by daveatt. After that, go to the settings of the Engulfing Candles Detector indicator. In this example, let's use white for bullish engulfing and yellow for bearish engulfing. Then click OK. The Engulfing Candles Detector will be used for making entry positions in the market. If the price returns to the order block area and experiences rejection, we will look for an engulfing candlestick pattern as an indication of potential reversal in the market. A bullish engulfing candlestick will be employed to identify potential buying opportunities, while a bearish engulfing candlestick will be used to assess potential selling opportunities. Now, let's discuss the setups for buy and sell orders. By order setup, 1. If the volume profile bar magnified order blocks bullish has already formed, wait for the price candlestick to return to the area of that bullish magnified order blocks volume profile bar. 2. Wait for a price rejection in the form of a bullish engulfing candlestick. 3. If there is a rejection in the form of a bullish engulfing candlestick, you can enter a buy position after the completion of the bullish engulfing candlestick. 4. Place the stop loss below the volume profile bar magnified order blocks. 5. Use a target take profit based on a risk and reward ratio of 1 to 2. Sell order setup. 1. If the volume profile bar magnified order blocks bearish has already formed, wait for the price candlestick to return to the area of that bearish magnified order blocks volume profile bar. 2. Wait for a price rejection in the form of a bearish engulfing candlestick. 3. If there is a rejection in the form of a bearish engulfing candlestick, you can enter a sell position after the completion of the bearish engulfing candlestick. 4. Place the stop loss above the volume profile bar magnified order blocks. 5. Use a target take profit based on a risk and reward ratio of 1 to 2. Before implementing this trading strategy, it would be advisable to conduct a backtest first. Ensure to maintain proper money management and trading psychology. Click the like button and subscribe if you find this video helpful. That concludes this video, and see you again in the next one.